Good morning. This is Dylan Jovine with Behind the Markets. Happy Tuesday. Today is Tuesday, September 9th. Today, I'd like to talk about the jobs report that came out. This is my first day back since this happened. Now, before I get to the jobs report, of course, a lot of folks wanted to know how it was to have your finger pop. What did it sound like? Did it sound like the broken glass, or did it sound like the big wet carrot snapping? Guess what? When he took my finger and snapped it, pop, back, it sounded like a big wet carrot snapping. And very interesting. Now, my son, Teddy, had asked if I would record it because he wanted to hear what it sounded like himself. And I went to the doctor, and when I walked in there, I asked him if I could record it, and he said no. I wish I would have recorded it because there was a good chance I would have screamed like, ah! When that happened. It was a painful experience, let's put it lightly. I saw stars, like one of the old Bugs Bunny cartoons when somebody gets hit in the head with a mallet. I saw stars. And I didn't yell. I kept my cool. I didn't even raise my voice. I just dealt with it. And that was because there was the drug rep in the doctor's room with us as this happened. And she's like an attractive woman. And I'm sitting there like, oh God, great. Of course it has to be like, I have to have company, people watching while I do this. I'm not going to yell. So anyway, so my son was happy to find out that it sounded like a big wet carrot snapping in half. That's what he thought. I kept my cool, et cetera, and now I got to wear this for a couple weeks. And the good news is that the first part of it was successful. The bad news is that they have to do one more little snap because there was another, it's still a little twisted. That's going to happen in a month from now. Anyway, today I'd like to talk about the jobs report that came out on Friday. Job creation was 22,000 below the consensus forecast of 75,000. And now with the revised Bureau of Labor Statistics numbers, the 3-month moving average for job creation is now under 30,000, which is really weak. Think of it like an aircraft where the engine stalls a bit. It's starting to stall. So the unemployment rate ticked up to 4.3%, and monthly earnings growth was 0.3%. Revisions for the prior 2 months resulted in a net loss of 21,000 jobs, also turning July's payroll into a negative figure. So this data basically guarantees a 25 basis point Federal Reserve interest rate cut in 10 days or so, 9 days now. And the odds on a 50 basis point cut are also there too. It's a virtual certainty of like 99% that you're going to see a 25 basis point cut, and it's a 70% that you're going to see a 50 basis point cut. I could see either of those. And remember something, when the Fed cuts short-term rates, stocks go higher. When Fed raises rates, stocks go lower. It's a seesaw relationship. As it looks right now, happy days are here again, at least for the stock market, not so much for the economy. And this is something that's a little bit concerning. And why is the unemployment rate dropping? Why is job creation dropping? Why is it so dismal? Why is job creation so weak? And basically, you could really tie that to the tariffs. There was a lot of uncertainty the first 6 months of this year. Let's be honest, there are car companies that are going to build factory. Any company that's going to build a factory is thinking to itself, I don't know if I'm going to build a factory right now. What are the import? What do the tariffs look like? What's going to be the deal with Mexico and NAFTA? So you're in Canada, you're going to freeze yourself into place. You're not going to really roll out a big expansion plan until you have more certainty. So we're starting to see that really reflected in the numbers. This is 100% President Trump's job market. On the flip side, I expect it to pick up in the fourth quarter as now that quote unquote big beautiful bill has passed. And now businesses have a lot more certainty in trade deals that we've seen come in. Again, the job market is a lagging indicator. The biggest job creators are the businesses, obviously, and the small businesses specifically, but large businesses, they've been frozen in place waiting to see what to do. Now, a few weeks ago, with this bill passed, Trump's budget passed, now they have more certainty, they have more clarity, they can start to make plans, and now they can start to put their offense back on the field. We can start putting our offense back on the field. Companies can say, okay, let's try to score a touchdown now. Let's put our offense on the field. Let's drive downfield. Let's make some money. But before that, this wasn't happening. The job market is weak. It's definitely because of the tariffs. Come on, anybody? Because of the uncertainty. But the uncertainty is starting to pass. So again, I think you're going to see a very nice pickup in economic activity, barring anything crazy, China getting cute or anything crazy, which we live in crazy times. I read an op-ed this weekend from Mitch McConnell in the Wall Street Journal, and a lot of folks don't like Mitch McConnell. I do. He gave us a conservative Supreme Court. I'll never forget that. He's the longest serving Senate Majority Leader in history. I know a lot of diehard MAGA people say he's not, he's a rhino. That's not true. He might not be MAGA, but he's definitely not a rhino. That's a silly thing. But he says that, and I agree with him, the world is at a more dangerous time than any point since the 30s, since right before World War II. And I agree with that. So, right now, but as I always say, we got to play the ball where it is, not where we want it to be. And the bias is still higher in this market. And until that story changes, we're going to play that ball right there with a higher bias for the stock market. Anyway, that is all I have today. Me and my lovely little cast here. Yeah, it's really nice. That's all I have today. Have a wonderful day, and I'll see you tomorrow.